Solar stocks having a very dark day, certainly taking a hit in the United States and, by extension, in Europe. This after SolarEdge reported its preliminary Q3 sales results that came in significantly below the street's estimates. You can see the reaction in the stocks on both sides of the Atlantic. They make ugly reading. Joining us now is Rob Barnett, Senior Renewables and Energy Analyst for Bloomberg Intelligence. Rob, what is the underlying story here? I remember during the European energy crisis, every single CEO you spoke to wanted to put solar on their roof. The energy crisis has gone away. Is this the kind of opposite and equal reaction to that story?
Well, the fundamental backdrop in solar still looks pretty good, actually. So we're probably going to see global solar demand increase by more than 50% this year. The problem that we're seeing in Europe, though, is that inventories got really bloated, and we're seeing a destocking phase occur right now within phase and perhaps some of the other companies exposed there. And higher interest rates are, particularly on the residential side of the equation, pumping the brakes a little bit on the demand on that specific segment.
So, Rob, where along the chain of solar is the kink that we're seeing?
Residential. So utility solar still looks pretty robust. If you look at a company like First Solar, they're roughly flat, down a tad today. Nothing like the kind of movement we've seen in SolarEdge and in phase. And what's the story for them? Well, they're more geared to the U.S. market than Europe, for example. And they're also, they have a massive backlog that's locked in multi-year kind of thing. So as the residential space goes, so do SolarEdge and Enphase here at the moment.
Rob, I'm assuming we must have expected this to a certain degree. Why is it so much worse than the market was anticipating?
Well, it's never fun when you have to announce that you had orders canceled. So they are literally at the point where they are saying things are there's still so much inventory out there that their customers are calling and saying, don't ship us any more product. And so I think we've been anticipating the slowdown. To give you some sense of the framing for SolarEdge, they grew their sales 58% last year, a quintessential growth type stock. This year, they had a pretty strong 1H. Their sales grew about 40% the first half of the year. Now, when we look at the full year, though, maybe they only get 5 to 10% uplift. And right, so that's just a big shift in expectations, even though we knew the slowdown was on the horizon.
Yeah, and then it goes from like inventory now to gross margins. Goldman downgrading the stock, saying it's 1,000 basis point move in margins. Like you just can't manage that. Hey, Rob, good to see you. Thank you so much. This is going to be an ongoing story with rates higher too. The space is going to get very difficult. Just look at wind in Europe. Rob Barnett of Bloomberg Intelligence.